It's the onerous manipulation and hedge fund dumping of paper silver and paper gold on the COMEX and on the LBMA that's holding back the price. But that can't go on forever. Greetings, land of Arcadia economics, and welcome to another bi-weekly episode of the podcast that I do on behalf of Arcadia Economics and Chris Marcus. Chris, happy birthday. Belated, I guess, at this point. I'm wearing a Bronco hat, because I didn't want to shower this morning. I'm recording this on Wednesday morning, but also Chris and I have an over-under bet on the number of wins and losses that the Jets have this season. He asked me a couple of weeks ago how many games I thought the Jets would win, and I said 3. And he asked if I wanted to put an ounce of silver on it because he owes me a silver eagle from a bet last season. And just to make sure I had the right number, I went and looked at one of my betting apps, and the season over-under for the Jets was 5.5 games. So I went back to him with 5 games, and he was bummed out, and we settled on 3.5 games. So actually, I think we might have settled on 4.5. Hopefully, he's written it down. But I didn't expect the Jets to win last week, and right now I wouldn't mind trying to buy my way out of the bet or doubling down. The Broncos and the Jets do play in Denver on October 23rd. But most of you probably don't give a shit about NFL football, but you do care about silver. And this is going to be a short video because I have a lot of work to do before I have dinner tonight with the CEO, Jorge Ganoza, and the corporate development officer, Carlos Baca of Fortuna Silver. I'm really looking forward to it. They're 2 of my favorite mining stock executives in the whole industry. And I'm anxious to grill Jorge and Carlos a little more in depth and in person about the Seguela project, which is going to have its first pour in mid-2023, and I think is a substantially undervalued asset in the stock price. And I also want to grill them about some of their development projects, most notably the Bosura project. At any rate, I think Fortuna is ridiculously cheap here. I own it in the small fund that I co-manage with a partner. We own a lot of it. And I also own call options in my personal account. So, and one point that I wanted to make is that a lot of people who are in the market now in the precious metal sector were not in the sector before March 2020. And they're actually a lot more frustrated than some of the longer term people. And one of the measures of that is that with my mining stock journal, I always have almost, weekly basis. I have cancellations, new subscriptions, and then renewals. And most of the renewals are coming from my longer term subscribers. And most of the outright cancellations are coming from people who subscribed since March 2020 when the market bottomed. And that I did have an influx of subscribers when the market screamed higher. Some of them are sticking with me, but it is what it is. However, it's usually a sign that the market's getting ready to bottom and move higher when I have a lot more cancellations from recent subscribers than I do new subscriptions. So, but again, the second point I wanted to make here is that I look at silver and gold as a long-term investment. So since 1971, gold and silver have outperformed the major stock indices. And I'm going to talk about what gold and silver have done, well, really silver since the beginning of 2001, because that was when the bear market that started in 1980, kind of arbitrarily bottomed. But at any rate, on a short-term basis, I don't really care about silver. I've got December in the money call options on Fortuna in my personal account. And if Fortuna doesn't, if the market as a whole doesn't start moving higher by the end of October, I'll move them out to March or June or whatever. I know at some point the market's going to scream higher. The fundamentals are just flashing the green light, and it's the onerous manipulation and hedge fund dumping of paper silver and paper gold on the COMEX, and on the LBMA, that's holding back the price. But that can't go on forever. So at any rate, I wanted to share a chart that I put together. This is a chart of shows the ratio of the S&P 500 to silver, and that's the greenish reddish candlestick chart. And against that, I've plotted the price of silver, and I started on January 2nd, 2001, and ran it to present. Now, this is not I'm not cherry picking dates here, because, as a matter of fact, silver actually didn't bottom until, I believe it was late January. So, but here are the prices right here on January 2nd, 2001. Silver actually bottomed at 4, and I think it was late January. So on January 2nd, which was really the price that was based on the year-end 2020, silver at the AM London Fix, which I got the data from Kitco, was at 452. The S&P 500 was at 1320. And I just threw in gold for grins, and that was at 270, 250. So from that time period to present, silver has gone up 424%. The S&P has gone up 293%, and gold has gone up 615%. So I actually bought my first physical gold and silver in the spring of 2001, I believe, roughly. And I still have some of those coins laying around. I have a lot more recent coins. I bought again in 2006. I bought again in 2008. And my most recent purchases, other than the colorized silver pandas that you see in the background here, my most recent purchases were, I bought some in 2018 when the price was heading lower, and I bought some again in early 2020. So the point on this chart, and really what it's showing, is periods when this line is moving down, silver's outperforming the stock market. And when it's moving up, price silver's underperforming the stock market. I'm just using the S&P here generically to represent the stock market. But one of the things that I wanted to point out, and it's after a long period of underperformance by silver, and I've marked those periods by these green arrows here. I didn't get them all. You notice that silver tends to form a bottom and move higher. In some cases, quite a bit higher, as the bull market, the bull move that silver made, really from the end of 2000 or wherever the price of silver bottomed, early 2001 to the spring of 2011, and then it went through a period of underperformance, and we don't have to get into why. It's mostly manipulation, but not all of it is. And then there's some other periods in here where silver underperformed the stock market, and it had nice little bounces here. And also in here, you've got some volatility in the ratio, and two-way volatility in the price of silver. So I guess I forgot to put a green arrow right here. I don't like to look per se at the February through April 2020 period, because that was a very artificial period in terms of how what happened affected the markets. But at any rate, we've got another period here of underperformance by silver. And silver's come down here, and I am of the opinion, could be right, I could be wrong, that the price of silver is, and of course gold, is percolating for a nice move. One other thing I wanted to point out on here, and I think this is kind of interesting, is that the area of these two lines, in other words, the difference, and really kind of rate of return difference, in the big periods of silver underperformance, in each cycle, this area gets smaller. and get smaller. And I think that a part of the reason for that is that over this entire period, you've had a growing number of investors, retail, institutional, family offices, what have you, who have been moving money into physical silver and also becoming a lot more patient with their holdings. And that's, in my opinion, I can't prove it. That's what this decreasing area in the spread between the relative periods of underperformance between silver and the stock market. And here you've seen it's widened out again. This has been a particularly nasty, I'll just call it a price correction period. We know there's a ton of manipulation in there also. But I also believe that the counter trend to this is going to be a rip-roaring move higher. And again, I don't want to go out on a limb and put timing on there. I'm just confident that it's going to happen. And ironically, I've been actually thinking about starting to buy some more physical silver because I think we're at a cyclical bottom or close to it. So there's a couple reasons why, aside from just looking at charts, I mean, charts don't tell the whole story. There's a couple of reasons why I think price silver is going to move higher. And one of them is, and some of you have already seen presentations on this probably, but there seems to be a growing tightness in the physical silver market. And there's a couple different indicators we can look at. I wouldn't draw that conclusion just based on one anecdotal observation, but one of the things is, and Steve St. Angelo of SRS Rocco sent around an email to a group of us and pointed the data out, pointed us in the right direction of the data, and showed some charts. And SLV has gotten very hard to borrow. And the cost of borrowing SLV, if you want to short SLV, has gone through the roof recently. And I went on my Fidelity platform, it has a link where you can see how much of something is available to borrow, how much of a stock or an ETF is available to borrow. And when I clicked on it yesterday, it said that it's very hard to borrow. And I think it said the rate was 11% to borrow it. But if you wanted to borrow shares, you actually had to call Fidelity. And I'm sure that's the same on every other major stock trading platform. That either tells me that the hedge funds, in addition to shorting silver futures, are also shorting SLV, and that very well could be the case. And there's some other theories out there. And again, all we can do is toss some theories out there. I like to base it on Occam's razor. The simplest explanation is usually the right one. But there's some theories that the banks are shorting SLV, as part of an exchange for physical program where they deliver SLV shares and then say, hey, when we've got some physical we can deliver into you down the road, we'll deliver it to you. I don't know. Who knows? Another interesting indicator, which we used to follow this all the time in the first decade of the 2000s, and I was following it up into the 2015, 2016 area. But then the LBMA stopped making the data available on a readily basis. But the silver lease rates, and there's a couple guys out there who track implied lease rates, and the silver lease rates have soared also. And typically what that means is that there's a lot of people who are looking to get delivery of gold or silver when the lease rates go up on a short-term basis, and they don't want to go into the futures market. And it also means that entities that might lend physical gold and silver for leasing do not want to lease it out because they might be worried about getting it back. And that's just, kind of in a nutshell, why the lease rates would rise. Part of it also has to do with the fact that the short-term borrowing rate, LIBOR and Fed funds has also risen. But historically, it's always been an indicator of physical tightness in the market. The third indicator, and if you have not read it yet, go to Bullion Star and read Ronan Manley's. He's written two articles, an initial one and one that updated it. And he's been tracking the withdrawal of physical silver from LBMA vaults, from vaults in London. And if there's ever an example of Gresham's law, where bad money forces good money out of the system, that's an example of it. What that means is that people, entities, and people, probably mostly wealthy individuals, who have a legitimate legal claim on silver bars sitting in vaults in London have decided to remove them from the vaults for whatever reason. I also think there's an aspect to that in which there's been some articles coming out recently from India about how India's increased dramatically this year its importation of silver. And I think that's probably the income and substitution effect, because silver's gotten ridiculously cheap relative to the price of gold. And so a lot of that silver leaving London is probably ending up as jewelry on Indian bridesmaids. So, and then the last thing, and there's actually been a somewhat impressive movement of physical silver out of the COMEX. Not as much as I'd like to see, but since the end of June, and that's when I kind of started tracking it. There's a guy on Twitter who updates it every day. I think his name's Silver Squeeze or something like that. You'll know who he is if you decide to search for him, if you don't follow him already. But since the end of June, and this is through yesterday, there's been 26.2 million ounces of silver removed from the registered category in the COMEX vaults. And that's actually, it was at 70 million ounces at the end of June, and now it's at 47 and change. No, 43 and change. Sorry, 43 million and change ounces of physical silver are in the registered category. So it's more than a third has been removed. Now, a portion of that has just been moved into the eligible accounts. So the owners, legal entitled owners of those bars, had the warrant removed, and they're still keeping it in the COMEX vault system for safekeeping. However, 16.3 million ounces since the end of June have been removed entirely from the COMEX. Now, as a percentage of the total amount of silver sitting in the COMEX, I'm not that impressed with that. I think it's right now, memory serves me correctly, it's about 318 million total ounces. So that's split between 43 and change in registered and whatever the balance is in eligible. But the point here is that it's actually silver that there has been 16 million ounces that have left COMEX entirely. And the reason why I want to see the silver leave entirely is that there's nothing stopping the banks who are on the hook for silver deliveries from actually dipping into the non-registered, unallocated pool of silver bars in their vaults and allocating them to be delivered to entitled buyers who are long COMEX contracts in the, in delivering them as if they are registered silver bars. Again, it's something you can't prove, but many of us have suspected that for many, many years. But at any rate, that's why I would like to see the total amount of silver actually leave the COMEX. And I think that's something short of reporting fraud, which we know the banks are highly capable of. That is something that I expect to see happen over the next 6 to 12 months. I think there's going to be a mass exodus of physical silver from the COMEX entirely. But before we see that happen, I also expect the precious metal sector to go into what hopefully is an extraordinary bull run. So on that note, I'll wrap things up. I hope everyone has a great weekend. And Chris, here's looking at you. Go Broncos.
Well, thank you, Dave. I sure appreciate that. And thank you to everyone for the birthday wishes. Sure have appreciated that and has been quite kind. And like Dave mentioned, was nice to see the Jets pull out a miraculous win the other day. Gives me hope if the Jets can win, then maybe we can even see $50 silver one of these days. So, with that said, I appreciate everyone watching at home. Also, would like to mention a thank you to Kuya Silver, who brought us today's episode, as Kuya did have some news out recently. They announced an update on their Carmelitas project in the Bethania district, where they are commencing initial field work. The recently past producing Carmelitas mine, which is only 3 kilometers east of their Bethania mine, has mapped and observed 5 veins, of which 3 saw recent production. And Kuya intends to conduct a more detailed mapping, prospecting, and sampling program to better understand the Carmelitas vein, including grade distribution, alteration, metal zoning, and other data. And as David Stein, CEO of Kuya Silver, who you have likely seen many times on the show at this point, mentions that their work at the nearby area has just started to scratch the surface on the potential to host a significant silver polymetallic deposit at depth and along strike, and the exploration of a potential second zone of mineralization, such as Carmelitas, will be a benefit to their long-term growth. So congratulations to David Stein and Kuya on that news. The link to the press release with the full details is in the description field below. Go there and click to find out more about Kuya Silver and their project. And as always, thanks for checking in, and I will see you again soon.